everyone. This is Rob Golfi with RE/MAX, the Golfi Team. I've got Conrad Zarini here with RE/MAX, Escarpment RE/MAX Niagara. And right here, we got Brian Hogman, Mission 35 Mortgages. We're going to talk to you what's happening in real estate this week. And the one thing that happened is a half-point reduction. Hey,
hallelujah.
So Brian, like I'm seeing, so Brian, I saw him. He doesn't live too far from where my office is. And I saw him running down the street in his underwear when that announcement made. At 10 o'clock, the announcement was made. At 10:01, Brian's running down the street. He's
it's worth a streaking. If that's not worth a streaking, I don't know what is.
He had 0.5 on his cheeks. 0.5 on his cheeks.
0.5. That's amazing.
But awesome. They needed to do a half a point because nothing happened in the first, really in the first three drops. And so they finally figured it out that we got to do something more aggressive.
Yeah.
And so they'll probably, So anyway.
Or they know something like the economy's really sputtering. And that's a little bit of concern. You know what I mean? That they're thinking that we got to do this to stimulate the economy. So it's like a zig and a zag, right? You know what I mean? Things like this. Like, I don't want to be the naysayer and the negative. It's great. I think it's a fantastic move in the right direction. But again, they must see some dark clouds or something on the horizon, right? So
yeah, I think there's much more to come because when you looked at that CPI number that came out, that it was at 1.6%. If you actually back out mortgage costs and rent costs, which have been super inflated, you're down to 0.6. So that's actually a very scary number. You know, TIF wanted it down below 2. We're actually very well down below 2. So I think the half point that we just saw there is a big indication of things to come. I'm not surprised if we see another quarter, maybe even a half in December, like for it to come down.
Yeah, CIBC is saying below like 2.75. By Q1, so the overnight rate will be 2.75. That's pretty crazy, right?
Yeah, and for all the clients that have been calling right now, just because all the mortgage brokers that are posting about this right now, the overnight rate is not the rate that you get as a client, okay? Because the overnight rate went from 4.25 to 3.75, and people saying, "Hey, can I get 3.75?" Well, unfortunately, not. The bank prime rate was at 6.45. That went down a half to 5.95, right? But the fixed rates haven't moved yet. It's just the variable rates. So,
so the question is, do you park in variable for a little while, pay a 3-month penalty when the rates go down, or do you save the money today and go fix? Brian, you're on.
This is my time to shine.
Come on, this is it, man.
So if you're buying a house right now, or if you've got a renewal coming up in 120 days, the advice is this. Take the 5-year fix to lock in for the next 90 days before your mortgage closes, because
the pre-approval.
Yes, on the pre-approval part, so you're 120 days pre-close or pre-renewal or pre-whatever you're doing, take the fixed rates today, because now you can make a better educated decision in 90 days as to what it's going to look like. We got an election coming up in 2 weeks. What's the 5-year fix going to look like? I tend to think the 5-year fix is going to go up a little bit in 90 days time when we see that variable rate coming down. Maybe not. But when you're 2 weeks prior to close, you can switch it to a variable. There's no point in taking the variable rate right now if you're in a pre-approval stage. Now, if you're a live deal right now today and you're going to go variable rate or fixed, I think it really depends on your budget and whether you like to go to the casino. I like the variable rate now. There's only a half a point discrepancy right now between a really good variable and between a really good fix. There's only about half a point. That's 2 more rate cuts, which I think we're pretty certain that we're going to see. My only concern is, I still have got, shock from Tiff Macklem telling me that rates were going to stay low forever and then rising them up to Timbuktu. So that still scares me a little bit, but I think we're all the indications, especially with the economy and the market right now, that we're going to see those half-point cuts. So I think it's a long way of saying the variable rate's a good option if you're okay to stomach a little bit of uncertainty and your budget can manage it.
Yeah. The one thing you were mentioning earlier to me was, when you lock in, we could end up, like, if you lock in for a long time, we could end up going up, like they drop again and then they go back up.
Yeah, like if we were talking about people that, we've been on this show, talked a lot about people who took 2-year terms or 3 years terms, like 12 months ago. So if you took a 2-year term or a 3-year term, 6 months ago or 8 months ago, it might be worthwhile to break to break the mortgage, pay a bigger penalty. You might pay $10,000-$15,000, but you might be getting a rate up to 2 points lower. And the other thing to consider is like interest rates are cycles. They go up and they go down. I know you've talked about this a lot, Conrad, that the cycles are actually getting quicker these days. Mm-hmm. So if you ride out a fix for 2 more years, you might be on the upward cycle again and missing the trough. So it's something to consider when you look at it. I don't know whether we'll be out of this in 2 years or not, but it's a much harder thing to look at the longer you try to forecast into the future.
Yeah, no, right now with the inventory right now, Conrad, do you think that we're going to move quite a bit of it within the next 6 weeks before Christmas?
Well, it's funny because we're also gonna talk about appointments, and what's interesting was I found when I went back to 2022 when the rates were rising. Okay, it was interesting that prior to the announcement, okay, in 20 this year, prior to the announcement, we got a real rush, and the Friday date was around 600 appointments. So for the most time prior, but was interesting when it was 2022, it was 2 weeks after the announcement when it was going up, right, in 2022. That's when we saw this rush on the Friday. So it was a very interesting scenario. So people are preparing. They're getting into the market. We're seeing more people enter the market. There's more. The showings per sale is getting higher, which means more entrants are coming into the market. So yeah, we're probably going to see this really robust November and December, like something we haven't seen in a long time.
Yeah,
I'm trying to remember the year that it was that way, but I will say this. It could be coming. I think it was probably December of 2019 where we saw this very robust period of time, and then obviously we know what happened after that with COVID. But I think you're going to see this robust November, December, so holiday season. Don't put out the decorations if your house is for sale right now.
Yeah.
Let's get it sold without the decorations.
Now, you on your report that you had, it showed that we're up 24.6% in appointments for the month of
same period,
same period of last year. I mean, So that's amazing. So things, the confidence level's there, and so I do feel that that inventory is going to move a little quicker now. I'm finding that even the higher end homes now, the over close to the $2 million, the $2.5 million mark, they're starting to get some action, and they're getting offers on homes right now out there.
And people are confident. Yeah.
Well, we talked about this as well, too, because we have the renewal tsunami that's coming out right now as well, too. The people that had those 1.95 or 2.25% 5-year fixed rates, now that they're coming up for renewal, now it's like, okay, honey, let's actually move now. They didn't want to move. They didn't want to do anything. So now you've got that whole tranche of mortgages and people that are like, yep, I'm going to wait until my unicorn mortgage comes due, then I'm going to move. So I think that's going to be a little bit of influx into the market too.
And you know what else we're seeing? We're seeing multiple offers, but I will say it's not multiple offers like the frenzy of 2021. It's tempered multiple offers. People are looking for good value. They're not going way over, but they're cleaning up in terms of their conditions and things like that. So less conditions, really playing with closing dates to suit the seller, because some sellers haven't bought either, so they're doing these very flexible closing dates. So we're seeing multiple offers again. The terms are very much that's where the game is right now, if you can call it that. That's where the strategy is going forward. So it's kind of it's a super interesting time. I think this is the best time to be in real estate. I can't even tell you why. And you said it a million times, Rob, and I feel that excitement, but it's so true. It's a really good time, and you can see human behavior and how this is all taking shape and things like that. It's a great time, and you're going to need experts. You're going to need experts like, the Golfi team and people like Brian. You're going to need that team of experts, right?
You know what? It's amazing that there was rough waters out there for realtors and people that consumers and stuff like that. And actually, I see that it's like we're going to be out of that probably in the new year for sure. February, I think we're going to see like a lot craziness happening again. Our numbers are going to be strong again. And because a lot of realtors out there left the business because they couldn't handle the rough waters, and it's tough when you're on commission basis and you're totally dependent on, if you make a sale or not. Like a lot of them end up, leaving, but if they stuck it out,
Yeah.
And things are coming together. And Conrad, like I remember I wasn't a realtor in the 90s, but I remember like I did own real estate. And I was in business, and I went through a lot of crap when it came out then. And I'm sure the real estate agents and also real estate was taking a change. I remember on Chatham Street, one of my last houses I bought, and I bought it for $100,000 in 1980. I think it was 88.
What number on Chatham?
14 Chatham. I also own 15 Chatham.
I had 7, so I just thought we had another one on there.
So
you guys are like
Southwest was the area that was the best area to own real estate. It's Southwest.
Yeah.
So, but the thing is, with that house, I bought it for $100,000, and then I sold it for $145,000 less than 18 months later.
Wow.
Like insane.
Yeah.
And then the guy that bought it from me, I don't know. I think he sold it for like less than what I paid for it. Like I think the banks ended up selling it because there was a lot of repossessions out back.
Totally at that
those
time,
days in the early 90s. But now that house is worth $700,000-800,000. Like, can you believe that?
Yeah,
insane. But the interest rates were at 14% back then.
Yeah. And that tells you exactly where interest plays in people's minds. But a little fun fact, I'm here in the US. I'm at a 5-state conference in the US. And what's really interesting here is the fact that there's no inventory. Like they think we're crazy. They say, what are you talking about? We have no inventory here. And as a matter of fact, this is the first time in US history that the average equity for an owner of a home is in the over 100,000, 160,000 here in the US. Wow. Everybody is out of underwater, and prices like 2021, when it spiked, they still went up even higher from then. Wow. You know how wheat went up and then dropped? Here it held because of the 30-year mortgages, and people had, 3 and 4% for 30 years, and they didn't sell. So inventory is really tight over here, and prices have done tremendous. It's going to be tougher for Canadians if they're thinking of coming down here. I'll tell you that much. It's not
going to be expensive.
Wow.
It's going to be expensive.
Yeah,
that's it. So are you there for the election right now?
Yeah. I tell you, got to be real careful around here. I was speaking here at a conference, and you got to really be careful with, what side
I'm sure. Have you thrown out a couple of jokes out there about the election?
I have. And they fall flat. And the other thing is, me, I dropped the F-bomb, right? Well, I'm in like the Bible Belt here, and they don't like the F-bomb at all. I get like this. Yeah, so I got to be careful with my tongue around here.
Oh my God. Wow. So that might be your last time speaking in that conference
again.
Yeah. Awesome. So anyway, guys, good with your buddy Tiff there.
Good old Tiff.
Tiff, and dropping it a half a point. We thought it was going to happen. I thought it was going to happen last month, but it happened this month. And same thing with you, Conrad. But we knew they had to be more aggressive.
Well, this is good too. You got to add it up. That's 1.25 points, right? That's 1.25% since June when we started, right? So that's pretty decent. And then when you take the average $500,000 mortgage or $500,000 line of credit, it's almost $500. Do you know what I mean? That you're putting back into the economy.
And how about the old adage that, what's this expression about it goes up like a rocket, then it comes down like an elevator? Well, that didn't happen. I think it's the opposite. It went up slowly, like, 1,000 cuts like an elevator, and then it went down like a rocket for sure.
It's going down out the window, right?
Oh yeah, totally. Like it's you can't even trust these guys. You know what I mean? And trust history. You just gotta live it every day and just look at the numbers and make your decision. And like what you said, know your budget, know what your tolerance are, your risk tolerance, and then take it from there and work with an expert. Really, at the end of the day, right? So.
Awesome. Guys, listen, I appreciate you guys being on. And Conrad, sorry for the mix-up on the time.
We're good.
Yeah.
I love how he's always there. No matter where he is in the world, Conrad is there.
My heart is with this podcast. Trust me.
So are you you don't have to answer this. Are you a Democrat or a Republican?
Right here, I'm a Republican, and I'm very Christian.
Is that how it is down? Oh yeah, it's the Florida State. That's right. Yeah, that's it. Funny. Anyway, guys, thanks a lot. I appreciate you being on, and we'll catch you next week.